So joining me in the studio now, a man who's no stranger to tough market conditions. Willem Buiter spent 5 years as chief economist at the European Bank for Reconstruction and Development. He's also served as advisor to the IMF, World Bank and Goldman Sachs. Now he's chief economist of Citigroup. Thank you very much indeed for coming in. Great to have you in the studio. You know, we're speaking about investors being jittery, and I mean, no surprises, because even before the earthquake in Japan and the subsequent nuclear crisis, there were doubts about the global recovery. We had unprecedented events in the Middle East. European debt was still a problem. Are you much more worried now about the sustainability of the global recovery?
Not really. There is massive uncertainty about the nuclear situation in Japan, and I think that is the only material risk to the global recovery. What's happened in Japan is already, of course, a human tragedy and a local disaster, but given the size of the Japanese economy, 9% of world GDP, and given the size of the destruction, provided the nuclear fallout doesn't contaminate large areas of Japan, provided that that doesn't happen, I think the damage to the global economy will be contained, and this will shave some, 0.3, 0.4 percentage points of global growth for the current year. If the worst case scenarios materialize, then all bets are off, and that's what markets are nervous about: the fear of the unknown.
And that's
the
the
tail
problem,
is
isn't it,
very
right
long.
now? Because the nuclear crisis, they're still struggling to contain the situation.
We haven't got a clue. I mean, you can't walk in there and look at a reactor and say, well, is it likely to blow or not? It is just extremely dangerous, and people are dropping water on it from an enormous height from a helicopter. If that's as close as you can get, it means the level of ignorance for everybody, even the experts, is staggering. And ignorance breeds fear, and fear breeds nervous markets.
And as you quite rightly point out, it is a human tragedy. Beyond that, we have big companies like Toyota and Sony halting production because of shortage of electricity supply. I guess that doesn't bode well for economic activity within Japan and beyond.
Sure, but that's a short-run phenomenon. If we do not have large-scale nuclear contamination over a significant area, then the supply lines will be restored, the power lines will be put back in. Now, Japan is an extremely capable country. There's large numbers of extremely well-qualified engineers. The whole world is offering support. Now, if this is contained on the nuclear side, then by the second half of the year, a recovery will be underway. I mean, clearly, a large chunk of Japanese physical capital, infrastructure, housing, some industrial, will have been destroyed. And so Japan will start a long way down in terms of its growth trajectory and productive potential. But these are not things that should throw the world economy, of course.
But I guess it's not just Japan in itself that might be the worry right now. You know, if you were dealing with just Japan or just the events in the Middle East or just European debt, these would be big issues in themselves, but put them all together, this is quite a shock.
Yes, I mean, if everything goes wrong simultaneously, we clearly have our goose well and truly cooked. But from an economic point of view, again, what is happening in the Middle East at the moment is still not terribly significant. Most of the price increase in oil we've seen since its low have been demand-driven. It's only $15 to $20 at most that have been put on as a supply shock, not even from the actual supply interruptions, which have been very minor. All of Libya's production is less than 2% of total global production, right? It's the fear of future much larger supply interruptions.
There's overreaction in the markets.
Well, the market is a coward, right? It looks at the worst case scenario and doesn't discount it sufficiently.